Okay, hello everybody. How's everyone doing? Hello, David. Thank you, Patrick. For those of you who took shorts in Aussie and Kiwi from Monday, I'd be going to the door here. Let me unfreeze my screen. Thank you, Steve. So if you took the suggestion seriously, my target was new lows, taking out these lows here. Hello, Kevin. On the Aussie, which was accomplished today. Kiwi accomplished it in spades. So I'd be booking profits here. Give me a Y if you're with me on it. These were big trades. Lots of pips from Monday, being bearish commodities and going with the commodity currencies. Hope it helped a few people. Maybe a few people put it on. I also want to talk about the yen crosses. I think that the guppy is topping here. We're getting this candle right here. Look at this RSI reading. It's real weak. I tried to tell you guys about it up here on this candle. So I think the guppy is peaked. I think that the euro yen doesn't have as weak of an RSI picture. The last high was over 70, but the guppy looks weak. It's just counter trend. Maintain our bullish bias in the pound. Yen got up to that near that 112 level we talked about last week. Got up to 1180 and also diverged. So we could be in for corrections and yen crosses. Give me a Y if you're with me. Everyone with me on that? And just for corrections for now, not a major, huge deal. Hi, Jess, Brooks, David, everyone, Ardianto, all my former LAR warriors are now face warriors. How's everyone doing today? So that's my view on the crosses. Let's see what the team thinks here of the guppy. See how far off base I am.
It's higher, mate. Yeah.
Got it, buddy.
As you see, all analysis points higher.
Right. So this is definitely a fade. Here's a macro. Let's see what the last harmonic. I know that there was a warning on the guppy from a few days ago when we reversed. There's basic technical candlestick. Elliott waves. Let's see where Greg's high was. So he was looking for 42.92 and then a pullback to 39.10, which kind of lines up, doesn't it, with what I just said. He was looking for 42.92. We got over 43. So possibility of a scalp here. Major counter trend. First target's going to be this moving average here, about 41.60. And if the yen and pound really correct, maybe back to 39. So there is some confluence with Greg's count and what I'm saying. Everyone doing okay? So also the crude, we were talking about the crude trying to bottom here. It looked like it did yesterday. Nick had a buy point at 02, and we are diverging here. Could be worth a shot right here with Nick's number, risking 48, looking for 51. So that's what I see this morning. Hello, Riff, David Ogles, Dan Norberg. So those are a few ideas for you to contemplate. Give me a Y if you're with me on the analysis I made today. That means taking in short commodity currencies, looking for potential short in the yen crosses, and beginning to probe the long side of energy. So it's actually acting better. I don't think we're going to get down to this 3-drive line anymore. Here's another 3-driver here, maybe down to 850, but I'll go with Nick's numbers. So what do you do? Here's something I want to suggest. What do you do when it's not getting to your ideal area to buy? Well, this is what I do. I put a toe in the water. Okay, Ardianto's already on it. There you go. You had a partial. So you put your toe in the water in case we don't get down to 850 or 8. All right, and this looks like a decent area to do it. The last low held above 30. It was at 33 down here after our session. So those are my calls. The next one is yours. We had Mark Chandler with us today. Looking forward to talking to Mark. Every time I interview Mark, I learn something new. He opens my eyes to something I did not see. So it should be a great interview in a little less than an hour from here. So Steve, how are you today? Anything you want to add to my potpourri of views on the markets?
Hey Dale, and good morning to everybody. No, I think plenty of the thrusts we saw post-French elections are indeed...
You're fading out. You're fading.
Are indeed, yes, about to, retrace some of the gains or losses equivalently. So I think that for people that want to take counter trend trades, today, perhaps tomorrow will be a good opportunity. And they shouldn't forget that, at the end, this is also an opportunity for somebody to rejoin the trend at better entry levels. You remember we saw the Euro crosses yesterday. Euro Oz is higher still. Euro Kiwi is higher still. Euro MXN is higher still. Only Euro CAD is a little bit lower. But those ones have traveled a lot as well. You remember at the meeting we were talking with the rest of the guys yesterday. We're probably going to also make a blog post on the Euro crosses. So as I mentioned yesterday, the risk reward is obviously not to try to buy them currently, but we're looking for the opportunity to participate in them and other things that need to retrace some of their moves after a pullback. The pound yen, as you saw there, because I'm also following Elliott wave analysis. I'm not as avid, obviously, as Grega is. He's our Elliott wave specialist, but indeed has a clean 5-wave move higher. Euro yen is also extremely overbought at the moment. I think that pullbacks will create excellent opportunities to join the move that I'm pretty convinced on a personal standpoint that the trend has resumed to the upside again.
Okay. On Canada here, Steve, I think Greg had said something yesterday that he thought that may have been it in Canada. When I look at it right now, it accomplished something yesterday. It took out the bears, okay? It took out the stops over this high and this high.
If I'm not mistaken, that was a 14-month high. So we actually registered a fresh 14-month high. And the reaction to it was not what you would have expected, because as you very well know, very often after we
should have gotten more follow through.
Exactly. Is what you're saying. After we break a critical level, you usually see, or you should see, acceleration if the move is real. But not only we didn't see acceleration, but we actually fell back through that level. And we're still holding 136, the general 136 area, 10, 20 pips above.
135.86 is halfway back from the high of the move at 46.84 and the low of the move of 24.88 or whatever. So, but it looks like it could have been a stop hunt. So there's the week.
It's
And,
very likely. It's very likely. We need
it,
confirmation, because if we don't get confirmation, this can easily prove to be a false break. And as you understand, this is extremely correlated, and its
with
fate
oil,
will depend exactly. So if the whole bounce oil thesis proves to
right.
be right, then yes, it's very likely that we'll see a move lower, and perhaps another rejection, because I remind you the last two times that we tested 136, we got serious rejections out of it, serious rejections. We're not talking about 10, 20 or 50 pips.
Right. There is a possibility that we could get one more push. This was a confirmed high, maybe up towards 640, but I'm definitely looking at this being a classic stop hunt. It shows up on the daily, right? So everyone who was bearish, Canada, had their stops over this high, stops over this high, and they're stopped out now, and it really didn't save them much money. So one of the traits of a stop hunt is no follow through over a key area. You know,
Yes.
usually there's not delayed fuses. Usually, like Steve was saying, you get through a breakout, you get follow through. Now everyone who had their buy stop above this high, they're saying I'm out, but the market's where I got out. So they're not going to recommit, because most people get into fetal positions after they get stopped out, and they go, oh, Canada burned me. You know, it wasn't Canada that burned you. You just had your stop placement wrong. And veteran traders, Steve, I've seen them get taken out of a trade and recommit to the trade if they still believe in the trade. And that's one of the more difficult things to do as a trader, but veterans can do it.
It is
So
indeed. It is indeed very hard.
alert for a high here and a low in crude.
I need to remind you, though, I think I had told you that before I even left for Rhodes, actually. We were talking about USD CAD some time ago, and I told you that this is an extremely tricky market. I mean, I'm staying out of USD CAD until we actually get a well-defined direction, because we have had some very, very clean technical moves that prove to be fake, and this has happened during the past 3-4 months, 5 months, at least a couple of times. So USD CAD is a very, very, very hard pair to trade at the moment. It seems that it's determined to trap people both sides. So I think
the crude is almost a cleaner trade.
Oh, much cleaner. Technically speaking, much cleaner. Yes, definitely.
Yeah.
Definitely.
So I got a few questions from the community. Hi, Tosin, how are you? Kiyoshi, what moment is secure to open the trade? There's never a moment that's secure. What makes a trade secure is risk management, not a moment. I hope that helps you.
If I may add to that, nothing will make any trade secure. Your account will be secure if you follow the rules for all your trades. That's the only thing you can secure.
Yeah, it's something that really doesn't apply to trading as secure. Dan Norberg is good with being short. Hi, Shinten, how are you? Okay, there's a good point. Once you bank it, it's secured. Very good, Jack. Patricia is asking me about different gaps. There are several different types of gaps. They don't occur as frequently in FX, Patricia, because of the 24-hour nature of it. In the old days in commodities, before we had night trading, etc., there were more gaps. There are a few different types of gaps. There's a breakaway gap. That's when you gap out of a formation like the euro did. Then there's a runaway gap, which is another gap after a breakaway gap. Then there's an exhaustion gap, which is filled right away, and it says what it means, that the move is becoming exhausted. There are certain formations with gaps. They're pretty unusual, but you can get islands with gaps. You could get island tops. You could get island bottoms. If you want to learn more about gaps, my technical analysis Bible was Edwards and McGee's technical analysis of stock trends. Thank you, BW. No, not always. You know, that's an assumption that could be dangerous, that most gaps are filled. They could be, but after an extensive move before it comes back. So, you know, I like to trade going into a gap, but just because you have a gap, you shouldn't trade looking for it to be filled right away, because a lot of times they're not for quite some time in both time and price, Patricia. So BW says no gaps in my knowledge. You're making me blush, BW. Okay. So Blake's going to be with us. He Skyped me, Steve, in about 14 minutes. He has some things to go over. And in the meantime, since Steve doesn't have the same amount of content he had yesterday, he blew his wad with his euro, with his euro analysis on all the crosses. Why don't we take advantage of the time, and you guys share with me what you're looking at. There's Morrow's already anticipating it, and he has a look for me.
By the way, Dale, I have a few things to show for whenever you want that we didn't go over yesterday.
Oh, okay. I thought you blew your wad, man.
Oh, I'm monitoring 45 markets. Come on, I'll always have something under my sleeve.
Huh? I figured I'd get you to say that you had more. That was just using reverse psychology on you. And,
I know you did.
It was very effective. And okay, let's take a look at what we have here. Here's the pennant look. This is from Morrow. Let's see if it is a pennant. U.S. dollar long, Dixie pennant. Yeah, could be. And, you know, nice contrarian view. Now that we've broken the trend line, and I couldn't get Blake yesterday in our meeting to commit that the dollar is breaking down, and this is a good reason that it may not. You know what? Very insightful view. Morrow, very insightful view. Yeah, kind of a wedge with the RSI. Yeah. So you don't know until it comes out of here, but I kind of like it. 1, 2, 3, maybe we are going up. Okay. So I know that Grega, in our meeting yesterday, and we all know Grega's an Elliott wizard, right? He won all those awards on FX Street. I interviewed him, and he thinks that the euro is way overdone based upon French election results, that there's big gaps underneath in euro yen. So I'm curious, Hardianto, what are you looking for on the downside if you're already short euro yen? Curious. Anyway, thank you, Morrow. That's a great look. That opened my eyes to something I wasn't considering. See how this works? I didn't see this pennant in the dollar, and I'm supposed to be some big veteran pro. And you helped me open my eyes to the possibility of how the dollar could still survive. So I appreciate it. Thank you. Any other looks from the community? If I don't get any looks in about 10 seconds, I'm going to have to sing Use Less Leverage. I promised Blake that I wouldn't do it. Okay, Hasselhoff thanks you. The community thanks you. Gold yen. So maybe if the yen's going to come off for a little bit of relief, we're going to get some type of relief rally in the metals. That's why I said cover the commodity currency shorts. So thank you very much. No other looks from the community? Okay, Steve, you're on then, buddy.
Gold, by the way, currently the weekly chart is an evening star formation. So
in what, Steve? Let me give you the controls so you could. Pardon me.
And I also wanted us to go through a couple of CAD pairs, CAD crosses actually.
Okay, bro.
Since we seem to be focused a lot on it. Okay, this is the weekly chart on gold. This here is an evening star formation. As long as we close here, as long as we close below the middle of the candle of the first of the three candles, which is roughly, let's say 1,268, 70, that's an evening star formation. That's a very, very powerful candlestick formation. Of course, that's why you need to combine. We use candlesticks as a trigger, but that's not enough to position yourself. So if we want to combine that, with the technicals, we also need a confirmation. This is a major area here. The area around 1,250. We have the 50 DMA.
Yeah, I remember Blake doing that period. Yeah.
We have the 200 DMA, etc., etc., etc. So the candlestick is already showing us that something is changing. Add to that the huge trend line, but I also need to see this area give way. If that happens,
1180.
Everything will be pointing for gold moving lower. And don't forget that if we're talking about a move that every kind of analysis agrees with, you shouldn't be worried if you lose 20 or 30 bucks because there are more to make there.
You know, Steve, I learned something a long time ago and I pay attention to it. I don't know if you ever heard of it, but the shares lead the commodity. So, you know, that's why I pay attention to mining shares. And in fact, I'm going to have a mining share expert on a week from this Friday after the NFP session. And the shares, if you look at XAU, GDX, the juniors, and you put them right next to the bullion, they've been way underperforming, and that's not a positive sign. Just like they were overperforming last year when the gold had that big bottom last year at the beginning of the year, the gold shares, you know, a lot of them tripled and some even quadrupled. So it's a different scenario this time. They're really lagging this recent rally that we've had from the beginning of the year. So
yes,
the same thing happened.
And this, I agree. First of all, I agree with you. Second of all, you know that I'm not a share expert. I mean, I don't trade specific shares with exceptions. You know, when I come up with some kind of a chart because everybody's babbling about it and they see some very clean technical perspective. I mean, Stelios and I have traded Twitter. I've traded Facebook in the past. I've traded some shares that I believe that there were clean technical patterns, and I also had a belief that something was completely overblown one way or another. Shares I only trade, under those circumstances because I like FX mostly and, indexes. But I can tell you as a fact that that also points, it's kind of worrying because it also points to the fact that the market structure is not as strong as we would want it to be, because as you understand, the reason you get that is the fact that somebody that is within the industry already knows something in advance. If your work is, let's say, being in X industry, gold, coal, or whatever, you are an insider. You already know what's coming very often, not always, but very often. And unfortunately, this is the kind of information that leaks to people with big accounts, usually banks, huge funds, etc., etc., etc. And that's why you see usually those kind of moves, before commodities follow lead.
Okay. Yeah, they also have fundamentals. I mean, sometimes you have to factor in the cost of energy to get the metal out of the ground.
But inside information is always valuable, you know what I mean?
Yes, I have a red phone to Janet Yellen. I trade bonds. So, okay, so now you have some CAD pairs you want to show. Kiwi CAD.
Kiwi CAD. You remember that we had, let's start by looking at this actually. Aussie CAD. You had a guest over, I don't remember what, I'm very sorry, but I don't remember.
Yeah, that was
It was a lady.
That guy from Sweden, Henrik Silverhall had
No.
Aussie cat up there.
Before that, it was a lady, if I remember.
Oh yeah, she was right. That was Tika,
Yes,
Graciela Fonseca.
Correct.
Yeah, she nailed that one from the high.
You remember that you told me, yeah, we were looking at the same thing, because you remember that you told me that you've seen many head and shoulders fail. This one had the target. Here is the target.
Yeah, it was perfect.
0.9951, and actually we even surpassed it by a bit. But in essence, we just reached the target and then rebounded. But look at today's candle here. After testing the 78.6, look at today's candle. It's huge. It's huge.
Yeah.
Even if we take it, you know, as a three-wave move, even if that proves to be a three-wave move, A, B, C, I think that there is a good likelihood that we go lower from here. Now let's look at
Steve. Okay, Steve, be nimble. Steve, be quick. Steve jumps over the candlestick. And don't burn your behind when you do it.
But look at
can you jump over a candlestick, buddy? You have a good vertical leap.
No. It's been many years since I could do something.
All right.
Okay, and this is Kiwi CAD actually. Kiwi CAD seems to be lagging in essence, the Aussie CAD. As you see, we seem to be forming now a head and shoulders formation. Obviously, a head and shoulders formation is not such until you break the neckline, but look at yesterday's and today's candles.
Yeah.
They're very strong. And actually, those four candles...
Well, you know what? Since we're talking head and shoulders, I have a question for you. I'm interested in your view. So for head and shoulders tops, the classic head and shoulders formation will either have a flat line or a little bit of an ascending line for head and shoulders top, and the reverse for head and shoulders bottoms. This has a little bit of a declining angle neckline. Does it make any difference to you?
No.
Because it almost gives it a wedge look a little bit.
Yes, you're right, and it could easily prove to be a wedge. For example, there it is. You can easily claim, for example, more or less, that's a wedge or whatever. That's why we say that a head and shoulders is not a head and shoulders until you actually see the neckline break. But let me tell you something. This is where you have to bind a little bit your fundamental thesis as well. I mean, for example, I think that the Canadian dollar is battered much more than it deserves to be. You know what I mean?
Yes.
I also think that for various reasons that Canada is more likely to revert monetary policy earlier than New Zealand. So taking that into account, also taking into account that I see some strong candles, rejection here, etc., etc., etc. I don't care about the inclination of the neckline at all, because you know there are a lot of theories about necklines, but you know, being completely horizontal, I've never seen in any kind of a book being you know, a hypothesis or a necessary rule to buy to. So the only thing that in essence troubles me a little bit is that the right shoulder seems to be prolonging itself. So if that is to play out, I want to see the move lower continue imminently. I mean, if we take more time and prolong it and start extending the right shoulder even further, then it's not going to be a head and shoulders formation anymore. It won't have the potential to be one anymore. So, you know, I'm monitoring this. So I don't have something actionable here at the moment, but I'm showing it because we were talking about the CAD, and this is something in my radar at the moment.
Okay, buddy. Thanks for sharing it.
And somebody asked, I saw a question about palladium.
Yeah, they wanted to see your palladium chart again that you showed the other day. And there it is. And it's come off since you...
No, I haven't pulled it.
That's gold. That's gold, yeah.
Why isn't it... For some reason, it doesn't seem to want to cooperate.
And we have some looks. Hardiano's looking for 1950 in Euro Yen. Hasselhoff, I'm sorry I haven't gotten to your share yet, and Shinten,
Okay.
I'll get to it if I have a chance. I know that Blake is due to be in here for a bit, so I'll try and work it in. Is it okay, guys, that at times I miss your screen shares because we're presenting? Give me why if it's okay with you guys and you understand. I don't like to hurt anybody's feelings, and you know, I respect everyone's work in here. So don't think that I'm ignoring you. I just don't want to interrupt. I don't want to interrupt our speaker.
Dale.
Hey, Blake, go ahead, buddy. How are you today?
I just wanted to interrupt you. And Steve,
Okay.
if he was talking, I was going to interrupt him too.
I appreciate it.
See how rude that is? So rude.
No, thank you for filling in some dead air. Oh no, that wasn't dead air. That was Steve Volge.
That was.
All right, go ahead, buddy.
Oh my God.
See, he just called you dead air, Steve.
Schizo, Steve.
I think you've been called worse, but the dead air, that's pretty bad. How you guys doing?
I am acting like I never heard it.
How you guys doing? How you guys doing today?
Good, buddy. What's on the radar?
A nap.
Yeah, you're not sleeping.
No, I'm not sleeping. I'm sleeping like 5 hours a night. I went to bed early, like really early, and I got up at 1 o'clock this morning. It's like, yeah, like I went to bed at 8:30, got up at 1:30, and I'm like, I'm trying to sleep 7 hours. I'm trying to like make my body sleep. It's just not happening. So unfortunately, I'm going to be a little bit of a train wreck a little bit later today. Steve, I see you're going over the New Zealand Canadian, a little bit of an exotic pair. What's the reasoning for that? Any particular reasoning?
We were talking about, let me show you actually. Sorry, I was looking.
We're talking Canada, so.
We were talking Canada,
Right.
so we were showing that the Aussie Canada hit actually its head and shoulders target and rebounded, but today it seems like reversing lower again. And I was showing that Kiwi CAD seems to be lagging because it currently seems to be forming a head and shoulders formation, if you see.
Yeah. Right. You know, I guess the you know, when you're trading a New Zealand versus a Canadian, which one do you think is going to underperform? And I would be really worried about is how weak the Canadian looks right at this moment. You know, it looks like the dollar Canadian could make a run for 140. Although the dollar looks strong against pretty much everything, it just the Canadian in particular looks very, very weak. I think that's.
Yeah, I think 38.5 or so, Blake, is 61.8 back. 38 something, 38.60.
Oh,
From the
okay.
high it made at 142 to the low.
That's got to be right because we're at the 50% retracement here at 136. Right. So, and I guess that's the only thing that really, you know, would worry me. But the Kiwi dollar really is underperforming as well. So it's like, which is you know.
And not only that, if we, I know that we're looking at the same thing, but look at it. Look at it currently. It's currently testing, it's breaking out of the triangle, and it's currently testing the line in the sand. Below here, it's, you know, abyss. It's the abyss below us. Look at it.
Yeah, true.
Yeah.
Yeah, so it's really, I guess, you know, which one's going to fall faster?
Yes.
Maybe the Kiwi will outperform to the downside over the Canadian. You know, I really wanted to be here for Mark Chandler. I mean, Mark, I'd interviewed him a couple of times when I hosted the Wise Trade webinars. Really enjoy his analysis, his take on things. He's very pragmatic, and that this simplistic technical approach I really can identify to. Him and I have talked offline how we really look at the charts in a very similar fashion, but he has such a great sense for the macro environment.
Yeah, the fundamentals. Mark is really elite on his fundamental analysis.
He is. He's just a really a great person to listen to. He's got such a good handle on the markets. He understands the political environment too of most countries. I think you know, even if he doesn't know as much as he thinks he probably gets out there and really learns a lot too. He's just a wealth of knowledge, a really great guy to listen to, and so I'm excited to be here for him. As far as what I'm doing today, I've pared back a lot of positions. The U.S. dollar Mexican peso. Stephen, I don't know if you're done. I'm just kind of talking right now. The dollar peso is above 19.
Blake,
the dollar
the only thing Blaker, the only thing I was about to show, because somebody asked, and I only have a very brief comment to do, is I had shown some time ago the palladium, if you see here, and I said,
yesterday.
No, it wasn't yesterday that I saw the palladium. It was last week or something like that. So, so I said that it has tested the 78.6. It was in an ascending channel, but also what seems to be an ascending wedge. And since when we last spoke, which was somewhere here, nothing has changed. It still looks like a possible attractive short, but that doesn't mean that it doesn't have a new high, because a friend of us asked here on the questions. So there's no change here with palladium. It still looks good to me to the downside, but there is no trigger yet. So Blake, it's all yours. You can go ahead.
Okay. Well, with that being said, I guess if you want to talk precious metals, the thing about, and thank you, Steve, and I'll take the charts here.
Before you get started, I have a question, a pretty good insight from Tosin. If Trump actually reveals his tax plan today, could the market sell off on, buy the rumor, sell the fact?
Yeah,
that's a possibility, don't you think?
I do. I actually do think. Well, first of all, I think it's a possibility for a couple reasons. And
one other thing, Blake. He's not going to go to the risk of government shutdown over the wall. So I'm sending him Pink Floyd's album, The Wall. So at least he could have something like a wall in his office.
There you go. Well. The thing about his tax plan is, everybody knows it's coming. So the buy the rumor, sell the news is one thing, but the market also may use another excuse that it could use to sell the news today is knowing that it's just a plan. Doesn't necessarily mean it's going to be passed. It could be very vague. We haven't seen the details yet. Will it even pass? I mean, he's had a hard time pushing healthcare reform through. Is he going to have a difficult time? I mean,
even his executive orders are being blockaded by the judiciary.
Yeah. I mean, okay. So when I look at tax plans, I always think about a couple of things. Is where is the money going to come from? So if you take money and you take it from the taxpayer, or excuse me, you give it back to the taxpayer, where's that coming from? What are you cutting? Where are you going to get that money to make those tax cuts, to spur growth or whatever the case may be? And I don't know. That's not my expertise, but I've got to be skeptical knowing that we are on the brink of a government shutdown. We are, having a difficult time. We're gonna have a difficult time trying to raise the money in one spot if we're going to cut it in another spot. You
think we're going to have a shutdown, even though he backed off from the wall? Maybe the Democrat, now we could blame it on the Democrats if it happens because they want to defund Planned Parenthood. So
it's possible. I just the way I look at it is there's going to have to be more cuts somewhere in order for this tax plan from the numbers that I'm seeing, as far as what we're cutting the corporate rate down to, and what if it's going to be that significant, where's the money going to come from? That's my question. So I'm sure the market's going to look at these ideas and say, okay, that's great in theory and all, but you know, is it a reality? And so that's why I guess the point I'm trying to make it here is that's why I think that the buy the rumor, sell the news could actually happen today, because it's not everybody already knows, oh, there's going to be some, you know, plan. Everybody already knew that. But then the next question is, you know, where is the money going to come from? And if the market starts to get skeptical, which I am, but if the market starts to get skeptical, then we could possibly see some selling on that. You know, we were and I have to go back to talk about, since it actually is intertwined with you know what's happening today. This is gold, and Steve was just talking about palladium and where it's up against resistance, and I wanted to actually talk a little bit about gold here. So gold is really at, and this is at trendline support. This is very minor support. I'm not really even paying too much attention to this red upsloping trend line. I'm really more or less paying attention to this here. Let me so I can take the distraction away from that line. I'm more or less looking at this breakout point. Do you recall 2 weeks ago how significant this was when we broke above the 200-day moving average and above this 1260? It was huge. It was so huge that we ripped 30 points.
Yeah.
Gold ripped 30 points on that. Now here we are hitting major resistance, and that's major multi-trend line resistance. We hit major resistance, and then now we're pulling back, and we're at very significant support again, because now this is the, you know, current resistance or past resistance, current support. So what will be really interesting is if the stock market does come under some pressure today, I would expect gold to bounce from these levels. For those of you that trade gold, I am long gold. I've been long gold right here for the last couple of days, and it's small, but it's manageable. Because the way I look at it is this: if I can have a small position of gold right now, and I know that risk is manageable, you know, if it drops down into the 50s, I'm probably going to start getting a little concerned about it. But if I know it's manageable here, and let's just say, and I'm walking a trade through.
Yeah, you have minimum risks for potential monthly breakout.
Yeah. So yeah, exactly. So let's talk. I'm going to talk this trade through really quick. So if you buy here, okay, your risk is fairly manageable, and I've got a small position. So if I take a loss, so what? You know, I take a little bit of a loss. It's business, you know, it's part of trading. All right, no big deal. But if I take a little trade here, and let's say for some reason craziness happens, and we bounce like this, and then we eventually break above the multi, and this is, by the way, because you guys can't see it all, this is a multi-year trend line. That's from 2011. So 2011, it spawns back from.
Yeah, it's actually a monthly or something.
Yeah, it's a monthly trend line. That's correct. If we break above 1300 right here, gold's going a lot higher. So what I'll do is I'll pick up the small piece here. Great. If I'm wrong, big deal. No skin off my back. I take a small loss. Blah 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 blah. But if I'm right and it bounces and it breaks above 1280, I can add another piece, which will be another third. We break above 1300, I add another third, and now I have a full-size position long, and then I can put my stops right below like 1290 or so. And now I'll have a full-size position to fully exploit a breakout in gold, maybe to 1400.
Yeah.
And then I'll have my stops at a protect, you know, I can actually protect some profit too by doing that. So that is just an example of what I'm doing today, which, by the way, I'm not doing a whole lot. I mean, I'm trading long gold, and guess what else I just shorted? I just shorted the dollar yen here, because the dollar yen's right at, you know, if gold, this is basically the same trade. I mean, you don't have to do both. I mean, you just, you know, I'm just keeping a little currency exposure here. But I know we're up against key resistance, right? 50% retracement. We have channel highs up here, but that I won't stick around until we get way up here around 113. I'm really just risking about 30 pips here. And so if you short the dollar yen here, if you don't trade gold, and you're like, oh, well, I don't really trade gold. Well, you can short the dollar yen with the same idea that, hey, if this is a daily chart, if let's say we get buy the rumor, sell the news, and the dollar yen actually sells off, we break below 111, then I'm going to add. Take a little bit of position here, but if we break back below 111 by the end of the day, I'm going to step on the gas. I'm going to step on the gas because we'll probably trade back towards 110, maybe 109.
Yeah.
You know what I mean? So
yeah,
everything about right now is trying to position myself in a small position, just in case we get the buy the rumor, sell the news.
right.
Just in case,
Can I make a comment about a breakout like the one you're showing in gold?
Yeah. And actually, we just got a question from Terry. He says, what are the odds that gold drops below 1,200?
Anyway, my point is that breakout tests, maybe they happen once, twice, but I'm a big believer that if the market gives you like a week or so to decide to buy a breakout or a breakout test, it's most likely not real. I mean, we had a recent example of that in crude where everyone was saying we broke out when we got above 52, and you had 3 months to buy the breakout. I said, how can this be a breakout? Mr. Market's not going to accommodate you and say, well, we had this breakout 2 months ago, so I know you didn't buy it yet. I'm going to give you a chance to buy this breakout 2 months after it happened. So I'm a big believer that if there are breakouts, you should get maybe one test and it should go. Or sometimes they don't even come back and give you tests. If the market's making it too easy, accommodating you at a breakout level for too long, I advise people to be skeptical.
Yeah, that's why I love the fact that we already tested it, we rejected it, and now so the next time if we do test these highs, then we are probably going to break out. That would be my gut.
This is your first test pullback to that zone.
Right. So Terry asked, what are the odds of us breaking below 1,200? I don't know. I mean, it's hard for me to make that judgment right now. The dollar looks strong, so if the dollar continues to look strong, then then the chances are that gold's going to break lower. But I'm not 100% convinced that the dollar's breaking out either. Excuse me. Sorry. Let me rephrase that. The dollar's breaking down right now, and if the dollar continues to break down, that should support gold breaking higher. But I'm not 100% convinced that the dollar is breaking down. So it's challenging at the moment. I'm not really clear on the direction, and I think we have to wait for, like if gold breaks back below this 200-day moving average, which is just like literally, this has been support. I mean, you can see it. If we break back below that 200-day moving average, I'm going to pretty much write off gold. It's like, okay, well, we're probably going back down to 1,200. I mean, that would be my initial thought. But I don't think we should be giving up on gold yet. And when I'm asked about areas that are so far away from where we're at, like if I was so sure we're going to break this trend line, I would be plowing in full bore right now. I would be a full-size position long, but obviously I'm not. I'm very skeptical that this is going to hold. That's why I'm taking a small position. That's why I'm only willing to add to make sure I'm adding when the trade's right for me, when the trade's moving in my direction. Because if I was so confident, I would be just balls to the wall long, looking for this breakout. But that's not where I'm at, and that's not where my head's at. And there's nothing in the market right now that's telling me that gold is going to be breaking higher. I mean, look at it. Equities are strong. Risk appetite's still strong. The dollar is trying to break lower. That should, help gold go up. But I'm not seeing it all just yet. Now, the flip side to all of that is I like to position myself appropriately for what I think is going to happen. I do think gold's going to make a break for 1,300. I personally do. I think equities are, are at risk at these prices. So I do think that that's a possibility. I do think the dollar looks pretty heavy, which will, continue to confirm gold's going to move higher. And I'm not a gold bug. I'm far from it. I've never been known to be a gold bug my entire career. But I'm also looking at things and knowing kind of where we're at in equities versus, where I think reality should be, which is probably at least, 10% lower. I think the risks are, if we start to correct in equities, that we are going higher in gold. So, but I'm not 100% sure in my mind, and we can never be 100% sure of anything, but yeah. In my mind, I will know when the time is right, and right now is not the right time to be stepping on the gas. There's nothing out there that says I should be, just full bore, maybe even, bigger size than a full position for me, and taking on a lot of risk right now. Nah, these are very choppy market conditions that you end up getting whipped around very quickly. So anyway, just some thoughts right off the top of my head, Dale. And hey, really quick, I'm looking what time it is. I know Mark Chandler's going to be joining us very soon. I almost said Mark. I was texting.
Mark Making Sense is in the house.
He is in the house. Awesome.
I see his name.
I always
Mark.
Love listening to Mark. I always love interacting with Mark, and I'm a big fan. So, but I know people probably need to take a little bit of a break before Mark comes on. So I'm going to pass it over to you.
Okay. Thank you, Blake, and good hunting on the gold, and thanks for your input as always.
My pleasure, and I'm going to be here because I want to say hi personally to Mark. So I am here. Okay.
Okay, buddy.
All right. Thanks, Dale.
Mark,
thanks, everybody.
Okay. Great presentation by Blake. So I notice the crew is trying. I'm going to take a quick break here, my friends. And just in case you're not familiar with the website, and we do have a mobile app, there's Blake talking about it, and then we'll begin our interview with Mark.
Hey, Dale? Mark Chandler?
I'm here. Can you hear me?
We can hear you, and I think we can actually see your screen.
Oh, no. I was really looking at I was really reading the story. I wasn't looking at the pictures, I swear.
and I'm not sure where Dale's at. I'm sure he probably will be here in just one moment. I just want to let you know we could hear you, and I can actually see your Let's Get Started screen. How are you doing, Mark?
I'm here.
Oh, there's
Good.
Dale.
How you doing? Mark. Mark, it's great. Welcome to FACE, Mark. Thank you so much for taking time out of your day to be with us today.
Thanks. I always like talking. I spend most of my days dealing with institutions, and they have deep pockets and mostly self-inflicted problems. And so I like dealing with people who are trading their own money. I think that's part of the trauma on Wall Street, huh? Is OPM, other people's money. So I like talking to people trading their own money because I think that's the real skin of the game. That's what makes a difference.
Yeah, and you know what, Mark? I've never dealt with institutions. I've been committed to a few during my trading career, but I can only imagine. I've been committed to a few mental institutions. Anyway, so, I consider you one of the best when it comes to fundamental analysis in the FX markets. And I've always respected your work. I think you and I started around the same time in the business, and so it's really a pleasure to be able to speak to you again. It's been quite a while, Mark, so thanks again for being with us. I'd like to get the ball rolling with your reaction to what Euro is doing after the French elections. I know that you were a long-term Euro bear. Has anything changed for you with the euro, and can you come up with any fundamental argument why the euro could continue to push higher?
Sure, thanks a lot, Dale. You're very kind. I think that, in the markets, I sort of suspect that if one gets good at these things, it's only because, sort of like what Thomas Edison said once, he said he didn't fail. He found 10,000 ways it didn't work. And right. I find that often myself. I've found a lot of dead ends. But so what I try to do is, I think it's hard to separate the noise from the signal. And so on my way over here to join the seminar, I sent out a note because I think disciplined trading requires a sort of disciplined thinking. And so I typically don't waver with the wind about whatever the fad is of the day. And so for me, what the underlying trend is determined by primarily interest rate differentials. And so those are, I think, are the driving force. And sometimes, so I'm looking at, say, for the euro, I'd be looking at the U.S. German 2-year. And for dollar yen, I'd be looking at the 10-year differential. And I find that that often is the underlying trend. But as you know, the trading, the being able to take money out of the market, not always knowing the underlying trend. Hell, I think I've lost money being long in bull markets. And so it's really like how you trade in the money management side. But so around that trend is the noise. And so I see the same thing. Everybody's looking at this gap higher opening on Monday, which I think is important. Even though I'm a fundamentalist at heart, I respect the charts. I try to study the charts. And I recognize this gap higher opening on Monday is important, partly because the gap.
Old timers like us would call it a breakaway gap, wouldn't we, Mark?
Well, it could be a potentially breakaway gap. I see that, and that is that nature abhors vacuums, just like the markets do. And so I'm kind of thinking, I won't be content until I see us try to fill that gap. When we try to fill that gap, that means going below Monday's low. That'll really tell me where things are going. And the same thing is true for the stock markets. All gapped higher on Monday, gap on the dailies, but also gaps on the weeklies. It could be a breakaway gap or even a measuring gap, in which case, if it's a measuring gap, it takes place about halfway through the move. And right. So you'd say we're on our way to 112, maybe even a bit higher than that, just if it was a measuring gap. I'm not convinced that that's the case. One of the things that strikes me is that I try to study what people like yourselves are doing. And the way I can study this is not, I can't really depend on listening to all your webinars and hearing from all the people who are taking positions. So what I do is I look at the futures market to try to capture your segment of the market. And your segment of the market, I say, is not the hedge funds. It is not the that I talk to. It's like the retail, people who would be trading momentum.
So are you talking COT reports?
Exactly, commitment of traders. Okay. Right. And what I find, and so traditionally people look at the net. But one of the things I learned in the crisis is that the financial pipes don't have to just handle net, but they have to handle gross flows. And that is just when you subtract the money going in both directions, but the money is going in both directions. And so it strikes me is that earlier this year, people pushed back against my dollar view, telling me everybody's long the dollar already. We can't do it at these levels. But what's happened since then is the long dollar overhang position has been lifted. And as of last Tuesday, so the commitment of traders data comes out on a Friday, covers up till the past Tuesday. The market, the speculative market, these are these trend followers, momentum traders, they had a gross record long euro position.
Right.
So now there were shorts too, of course, substantial shorts, so the net position looks much smaller. But the gross long euro position is the biggest it's ever been. And so what do I think is going to happen? I sort of have the same mindset I think that Blake does, but my stories often begin with the fundamental story, and then I back into the technicals. But I sort of see what can happen, and that is that the market is anticipating, because of these hawks that have been talked recently, they're anticipating that French election behind us, at least the first round, that everything looks good. ECB changes their mind, they can begin exiting policy, and my divergent story is out with yesterday's news, and the new story is convergence. But I think the ECB is going to take a dovish tack. And I think that gradually people are going to come around to my view that the June rate hike, unless something changes, the June rate hike's in the cards. Back about a week ago, the market was only pricing in about a high, say a solid 1/3 chance. and I think it's going to be coming back my way. I think it's already begun moving back my way. I think the market exaggerated the downward pressure on U.S. interest rates.
And don't you think that the S&P's about to make or trying to make new record highs, NASDAQ 6,000, also paves the way for the Fed to do it without any type of at least short-term risk that the market could handle it?
Yeah, I agree, Dale. I mean, I think this is, for me, one of the other key things is I know that, you know, with the influence of zero hedge and just the skepticism elsewhere expressed about authority and what people say and lying and changing their minds, I do take the Fed at face value. And when Janet Yellen says that previously, back when I thought they would hike rates in the beginning of the cycle, they waited a little bit. This is in late 2015. She says because the financial conditions changed when the Chinese stock market sold off. And so I think that the rise of the stock market, as you note, the decline in U.S. interest rates, the weakness in the U.S. dollar has eased financial conditions when the Federal Reserve is trying to normalize them. And so I think that the scenario of something like this takes place, that that by the time the ECB finishes buying assets, expanding their balance sheet, the Federal Reserve will begin shrinking it. And the BOJ, as we'll probably learn tomorrow, is nowhere even close to really thinking about an exit strategy. And so my scenario would be this, that the Fed hikes in June, probably September, then they take off some time like Dudley sort of hinted at publicly, that the Fed pauses a little bit on the rate cycle so they can begin stop recycling the maturing issues, shrinking the balance sheet, and then maybe hiking rates again beginning sometime in Q1 next year. Meanwhile, I have the ECB tapering, that is slowing down their purchases maybe through the first part of next year.
So and they're like 2 years behind us.
2 years behind us. Plus, for me, that's the other news, is that I really have been arguing against the claim that populism, nationalism is sweeping across the world. I see it as primarily an Anglo-American phenomenon. As we've seen, Austria, the Netherlands, and the French have rejected it, and it's clear to me that the Germans are going to reject it. But to me, the problem is going to be emerging next year, next spring, about a year from now, when Italy goes to the polls. Italy is the only EU country that anti-EU sentiment has gone up since the Brits voted to leave.
Interesting. Didn't know that. See, so there again, you know, you proved my point. Every time I talk to you about your view on what's happening in the FX arena, that's interesting that, you know, everyone's focused on the German elections and you're sanguine about it, but worried about Italy next year. And their banking system is on life support.
Yeah, Italy's got a lot of problems. I'd say primarily it's slow growth. As Reagan showed us, Clinton showed us, and Trump wants to show us, growth solves a lot of our problems. And the slow growth in Italy, which is practically no growth in the past decade, net practically no growth, that just weighs on the banks through the bad loan problem, not much demand for lending, slow growth, and we're still talking about high unemployment, especially among young people.
Yeah, the only growth I get from anything Italian is my waistline from Italian food. So that's an interesting view, Mark. And so you're kind of neutral here until we see some more price action in the euro. Cable has had a pretty dramatic move after taking out its 09 low of 135, and we rebounded. Article 50's out there. What's your take on what's going on in the UK and cable?
Yes, I think that the positioning there is very interesting too. So as you know, sterling jumped when May announced its election. But what happened? Why did sterling jump? So it turns out that it really, even though there's a very large speculative short position in those futures market, the shorts did not get out. Very little. What really happened? New longs came in. So the shorts are still vulnerable to being squeezed out. And so I think that we get above like 130. I think the shorts get squeezed. I'm not sure we will do that. I mean, I think that before we even get to the national election, we'll get in June. The UK is going to have this local election, And the local election, I think, that's about when sterling's going to peak, is because Labor, which has the majority of these council seats, like city government seats, they're probably going to get wiped out. They're going to suffer very steep losses. And already I've been talking to some reporters who think that the Labour Party in the UK is history, just like they think that the Socialist Party in France is history. So I think that sterling could rise a little bit further. There's still a substantial short position out there, but that 130 level I think is key to really is key. And you can see what's happening. You know, we've been really trading sideways.
Yeah, doing
one day markup is sterling, trading sideways, and so I think that the technician in me says, well, this is going to be either flat or a wedge, but probably a continuation pattern. The odds would favor a continuation pattern, I think, there. And so I can see you have your retracements up down the chart. And so, so I'd be looking for another leg up. Can't say I'm a big fan of sterling. I think that in the long run, the UK is going to be poorer outside the EU than inside the EU.
Interesting. I have a couple questions from the community. One is, are euro bonds and euro correlated, and does a lower euro bond value mean a lower euro fundamentally?
Yeah, so how I look at it is I'm always running, I think there's one of the more important things for my approach to the markets, and I can see, Dale, you have the same thing, and so does Blake, is we're always testing our ideas. They're always hypotheses, and we're waiting for some proof, and we try to restrain, that is a discipline, of not being more confident than the data allows us to be. So I'm always running these correlations on currency movement and interest rate differentials and commodities, stock markets, and I find that the euro is better with the 2-year interest rate differential. And I was talking to a Federal Reserve official recently about it. He said, why do you use a German 2-year? That's not really representative of Europe. Because Germany, obviously, it's diluted because you have it, you've got next to that German steel, you've got some alloys from Italy and France and Spain and whatnot. And so I'll tell you why I use it, because it works and because it's simple. And that's what I look at a lot is I don't have the mind, and my clients don't have the mindset to be following 20 different variables. If I could boil it down to 2 or 3 variables that can explain 80%, I think that's about the best we could hope for. So specifically, I do look at the 10-year German U.S. 10-year interest rate differential. I find the 2-year often, including right now, has a tighter fit.
Okay, so yeah, Forrest Gump had it right. Keep it simple, stupid, in a complicated business, right, Mark? And
I think
go ahead.
So we try to do. Sometimes I think that when I teach, I feel always guilty that when you offer a simplified model of something, you're deceiving people. You're lying. But that simplified model lets us think about the bigger, more complicated issues, and it gets us not all the way there for sure. Life is it's multi-determined, but it gets us close. It gets us closer.
Okay. Well, Blake tweeted something from, I believe, your blog yesterday, and you have some views and commentary on our trading partners of maybe the end of NAFTA with what's happening in Canada and Mexico, and that you had some views on our major trading partners and their currencies. What are you seeing there, buddy?
Yeah, so this is a trade that appeals to me fundamentally, but also it's like screaming at me technically. I'm not allowed to trade at the bank, but I advise our prop desk, and I'm trying to get them to go long Canadian dollars against the Mexican peso. This cross, Canada-Mex, has moved in Mexico's favor this year. Look at that, 17.5%. It looks to me like it's trying to form a bottom here. Maybe it's a rounded bottom, maybe it's a head and shoulders bottom of some sort. But as we get above that 20 level, I think it looks very bullish to me. And I think that the amazing thing too here, this is where the speculative market positioning at the futures counts. The market, the speculative community, has gone long Mexican pesos for the first time in 2 years. And I think people are exaggerating this impact on the Canadian dollar of this trade dispute. I am critical, as many people know, of Trump's policies, especially on trade policy. But I think it's wrong to blame too much or to think that this is being protectionistic on Canada. on both the lumber and the dairy complaints. These are long-standing complaints that American producers have had. And I think what Ross is playing, Commerce Secretary Ross playing an interesting game. He took the cases that the Obama administration left unclosed, and he's pushing most aggressively with those. And those are those two outstanding issues with Canada, but they are a small part of our overall trade. And so,
it's symbolic at best.
Yes, and so I'm actually encouraging our clients to try to pick a top in the dollar against Canadian dollar, because there, that 2-year interest rate differential also moving in the U.S.'s favor. It's got some momentum behind it as well. And I think on a bigger picture, when I look at a weekly beginning from last year's multi-year high, 147, we're just testing the retracement level up here at that 135.75, 136 area.
Yeah, halfway back, right? Halfway back.
Yeah, I think dollar CAD could go further, but that's why I like the idea of being long Canada against Mexico. Some people tell me, well, if Trump is picking on Canada, they only want to be short Canada. That's against the dollar. And I think what we've seen is the Mexican peso, since about 2 days before Trump was inaugurated, the Mexican peso has been the strongest currency in the world. They've raised interest rates. They've changed their intervention tactics. To me, what this Canada-Mex trade, this NAFTA trade looks like really, is ultimately picking a bottom of the dollar Mex on the cheap by picking up some Canada at low prices on the cross.
Wow, and yeah, that's so. Do people have a hard time wrapping their head around that cross? Well, because it's an unusual cross for most people.
Yeah, it's an unusual cross. It's been around for a while. People talk about it occasionally. But what's hard for our clients is a lot of our clients are, as fund managers, are dollar-based investors, and so this requires. So we'd have to translate it for, say, a bond manager. What it might mean is to be taking some profits of being underweight Mexican bonds and maybe buying some more Canadian bonds. It's really a question of overweight, underweight for a lot of our clients that really track a benchmark, which is another reason why I respect your listeners, Dale and Blake, is that mutual funds, my clients, promise relative returns. The stock market's down 10% and you're only down 5%. Don't you feel good? I don't. Yeah. And you and your listeners are you are promising, either yourselves or some, a few people, you're promising them absolute returns. And I think that's an important distinction.
Okay. So I had a question. I don't know if you have a view on it. We've had a couple of dynamic gold rallies in the past couple of years. Shares really haven't participated. Do you have a view on the yellow metal here?
Not really. I mean, I'm sympathetic to what Dale was saying. That with the weak dollar, you think gold would break higher. For me, it's a question too of interest rates. When we have deeply negative or very low interest rates in the world, the opportunity cost of holding gold, and I mean large sums of gold, is less as interest rates rise. Less. Yeah, so it's less. But I think you're right. I really look at gold primarily from a technical point of view, not fundamental, and I'm looking at just momentum. It's really a question of like moving average, crossovers, looking for divergences, looking for something that's out of sync. So if the dollar were to really get some legs, and not just against the yen, but I always see it building again on the dollar block currencies. Maybe there's an opportunity there to go the other way. But I sort of agree with what Blake was saying, that we have to be disciplined about our entry levels and our exit levels, and only take the position that we're confident with. Like I think Blake was explaining about his scaling into a position a third at a time. That seems to me to be the prudent strategy. I see institutional clients do the same thing. Don't commit all at once. Bleed the money in. So it's really a type of money management, risk management, which is, as you know, the key to making any money.
Right, because going all in or even coming all out, you're expecting perfection, and that's the exception, not the rule.
Yeah, I find that the same rule in gambling as in the markets, and you never take the risk of ruin.
So, Mark, any view on what's happening with the Aussie, Kiwi under a lot of pressure? Looks like if we take out recent support, we could be in for a free fall. And Aussie, bottomed quite some time ago, been under pressure recently, but can you make a bull case for Aussie continuing its run? Maybe an 80-cent Aussie, or are you more in the 70 camp?
Yeah, I'm pretty bearish to commodity currencies. Partly, I think that we've had a commodity rally, and the commodities accounted for Australia, like iron ore, copper,
Right.
and so yeah. I mean, for me, I mean, I often look at. I'm giving you all my other little like rules of thumb and my trade secrets here, but one of the things I find is the Aussie often leads the other currencies, and so the fact that the Aussie's turned down here, and by turning down, I mean it's trading near the lows since in late January or so. Or trying to really make
it got hammered this week with the weakness in the precious metals.
Yep, and I think as the commodities come off, as the June rate hike comes into view, yeah, I like the commodity currencies lower. I think that there's many people who I talk to who still think that the Reserve Bank of Australia could cut interest rates later this year. That some of the inflation numbers and the employment numbers are really concentrated in a couple of cities, and the rest of the country still in a poor shape, trying to adjust to the new environment.
I know this is a little bit out of your bailiwick, but this bull market in equities, we're looking at 9 years. It's been a long time. People have been decimated trying to top pick this thing. Are you sanguine about S&Ps, or do you think that with what you see, because you remember we were taught a long time ago, Mark, three hikes and a stumble by the Fed, and we've already had 3. What's your take on what's happening with U.S. equity markets here?
Yeah, it's a good question. I mean, I'm stumped, but I don't see much. I don't see an alternative. I mean, so I've gone from moving from trading, like trying to play the ETFs like Spider, to really looking at the at individual stocks. Even there, I'm not really buying a lot. I'm trying to use trailing stops on a lot of the stock that I do own. But I'll tell you that in the big picture sense, I think that stocks are still going to end up going up higher. And here's why: is I think that there's people. I think I share this view with a lot of people. What are we going to do with the money otherwise? It's what are we going to do with our 401k money? Buy bonds?
Right. So Tina, no other alternative. There is no other alternative.
Yeah, and so, but I think that what it means is you still have to be disciplined about it. But here's the story really, I think, why I like U.S. stocks, say, over European stocks, because everybody's been buying the European stocks. Now, you look at these fund trackers, they're the type of clients that use our foreign exchange services at Brown Brothers. And you can see how the fund trackers, which funds are getting money this year? What are people recommending?
They're chasing
European
performance.
stocks?
They're chasing performance in emerging markets in Europe because so far they've outperformed U.S.
Yep. And so I'm thinking that song's getting kind of old, and that we'll have to see what happens. But as the dollar comes back, I think people unwind some of these European trades, and then at least fund managers say as we get further towards the end of the second quarter, underweight U.S. equities. And when everything's said and done, I mean, we're going through this earnings season. This is one of the things I know people might agree with my macro views or my macro analysis type of thinking about things, but I find many of my readers aren't crazy about my politics, and I just don't see the sense of a corporate tax cut when I'm looking at these earnings and corporate America is reporting record profits.
Yeah.
And
well, they need more float for buybacks.
Yeah, but it's funny you say it, because here's where I'm thinking it's happening. Where is the bid coming from for U.S. Treasuries? We know that the central banks like China and Japan have been reducing their holdings. We know that because of the drop in oil prices, OPEC doesn't have the appetite they used to have. Well, U.S. corporates are sitting with something like $2.7 trillion offshore. And a lot of that money is already invested in U.S. denominated paper assets. And of course, nothing's safer than the Treasury market. Nothing's deeper than the Treasury market. So why are yields so low? Because corporations have a lot of money, a lot of cash. They're not sure what to do with it. So like you say, share buyback, debt buyback.
Interesting.
Buying U.S. Treasuries.
I was wondering where the demand was coming from. Another question that I had in my mind you answered. Let me ask you this, Mark. Is any of this geo stuff, North Korea, Syria, Russia, Iran, any of these things concern you? You know, they say in a bull market, anything that could go wrong won't. And in a bear market, anything that could go wrong does. Do any of these things and the way the administration is really talking kind of very hawkish and sending nuclear subs, which are supposed to be covert, and publicizing it, does it bother you at all, what you see happening on the world stage and any impact it could have on our thesis of trading and the markets here?
Yeah, I can't say that that I'm really happy with the way things are going. But the world's a dangerous place, and in some ways, what Trump has done so far, what the president has done, is not really out of line with what administrations in the past have done. Yeah, I realize he dropped the biggest bomb, non-nuclear bomb in Afghanistan. Right. But most of this is it's like the weapon rather than like the actual commitment. I think he's taking a harder line, but I'm not sure that it has yet deviated from what I'd say is broad American tradition, and with maybe more of an emphasis on the militarist aspect of it as opposed to the statecraft. And this is, I of course be in the other camp, but I do recognize that still so far within American tradition. I think that what could be more dangerous is if the U.S. acts unilaterally. And I think that at first, many of our trading partners and allies were afraid that the U.S. would be isolationist. Right. I didn't think that presented a fair reading of where Trump is coming from. I don't think he's an isolationist, despite trying to build a wall. Well, I think what it ultimately is we don't want the people he surrounds himself, don't want to be told by the WTO, the World Trade Organization, or the UN, or the IMF, how the U.S. should defend its national interests.
Right.
And some of these agreements, like the lumber agreement with Canada, is long-standing. Canada points out, though, that every time the U.S. takes them to a court, and this is before the NAFTA itself, when they take them to GATT and WTO, that the U.S. loses most of those cases on lumber with Canada. Of course, Wilbur Ross says, well, that partly it's because NAFTA sets up a 5-person panel, and Canada gets to name 3 of the judges. My point really is that what scares me and what I worry about is that the rule of international law is being weakened. In the short run, it doesn't really matter for our investment and for trading. But I think it makes the world more dangerous, and it makes the feedback, it makes these things more vulnerable. So I'm concerned about these things. I don't think it's yet a break from American tradition.
Okay. How about Russia's alleged interference in our political process and FBI investigations? You know, it's been a long time since Watergate. It's been a long time since any president was under pressure. Do you think that down the road this could come back to haunt and make getting policies through more difficult for the new administration?
Yeah, I don't know. I think that at the end of the day, is it really surprising that one country tries to influence the politics of another country?
The U.S. has been doing it forever, hegemony, right?
Yeah. And so whether it was successful or not, or whether I think the key issue is what kind of collaboration there was with some Americans, and that'll come out in the wash. I think at the end of the day, though, there was mutual interest, but perhaps not collaboration. I'm not sure that it doesn't seem to me that this is the Watergate took place in '72. Nixon doesn't resign until I think '74. It takes a while for these things to really filter through the system. I think the more pressing thing for the president now is showing some successes so that Republicans in Congress don't run against him in November next year. It's really to get a strong legislative platform done, deliver the reforms, deliver the goods, boost growth, and then in November next year he can retain a majority. Otherwise, I'd be watching his poll numbers closely, not what the Democrats say, because frankly the Democrats haven't shown much support anyways. But most of the polls suggest he's still holding on to 85% at least his supporters, of Republicans. And so I think nothing changes until that Republican support is undermined. And so far, it seems like nothing that the president has done has undermined it.
Mark, I always love interviewing you because I could ramble from subject to subject, and you you have something to say on everything I ask you. And may fair winds follow you and pips rain down on you and your clients at your bank. And I really enjoyed us reuniting and having a great conversation again, Mark. Thanks for giving us your time and edifying. Blake, you have something to say?
No. Mark, I just wanted to say, I wanted to say thank you for joining us. It's always a pleasure to hear you and to hear your views. You're really truly a gem out there. Thank you.
Thanks a lot. Good luck to everybody.
All right. Thank you for edifying the FACE community. That's Mark Chandler. You can find him on Twitter at MarkMakingSense. What's the web address for your blog, Mark?
My blog is Mark to Market. Mark with a C to keep my mom happy.
Okay.
Hey, Mark. I think Steve Volge wanted to say something. Steve.
Yes, Mark. Hello. By the way, it's Steve Vulgaridis from ForexAnalytix. I just had one quick question for you. I know it's a huge subject, but in one paragraph. There is an important question that a lot of people ask. How long do you think this business cycle, I'm talking about the global one, can still last before we go to the next recession? So in essence, what is your point of view about this business cycle? And do you think that we're indeed, as statistics show, near the end of it, or special circumstances like the slow growth we had might prolong it further than expected?
Yeah, no, good question. I'm in the slow and long camp. For me, there's no major imbalances in the economy. So I can see how we could have a global economy. In fact, that's the good news really from the IMF, upgrading their outlook for the global economy, partly because Brazil and Russia, two large economies, are out of recession. So I think that, what do I know? I mean, I don't think we're in a recession. I think that Europe's not in a recession. I think Japan's going to show some decent growth here in Q1. And so my best guess is that we're still more than a year or two away from the end of a business cycle. But I'd be looking for imbalances, not so much the average length of the business cycle. But I can see how we could be in a mature phase of it. But if we get the kind of fiscal stimulus that the president is talking about, if China continues with its big infrastructure, one belt, one road, and the Europeans try to do some infrastructure spending themselves under the Juncker plan, I think that things look okay. I mean, slow growth because we haven't solved the productivity problem. But I'm not so pessimistic thinking that we're at the end of it yet.
So you think that fiscal stimulus is a viable option? And when I say viable, I don't mean for today, but I mean, don't you think that already overburdened indebted economies cannot afford to pile more debt just to stimulate the current economic environment?
Perhaps that's true about Spain or Italy or Greece, but I don't think it's true for the U.S. I don't think it's true for Japan. It doesn't seem true for China. And of course, the big story too is going to be that I mentioned before that I'm not very optimistic on the UK economy. Probably by the time we go to the elections in 2020 or so, India will replace the UK into the top 5 global economies, and they're growing 9%. So globally, I think that some of the countries, even those with deficits and budget deficits like the United States, like Canada is already doing some fiscal stimulus. I think that there's probably room to do this, without a big spike in interest rates. Interest rates are still very low.
You bring up India, and you're an FX trader. What was your reaction to Modi's move to go cashless in India?
I was shocked. I still don't know.
Do you think it's a test case for other democracies?
Well, because remember what he did was he didn't really force cashless society. What he did was he took the largest 2 bills out of circulation, issued new ones, and it was screwed up implementation where the ATMs and cash registers didn't hold the new bills, It was a disruptive process. It's hard for me to imagine another country doing that per se, but you know, the U.S. There's been a campaign in the U.S. to get rid of the $100 bill. There's been some cases, arguments about Europe getting rid of the 500 euro note that I think they're going to be getting.
Larry Summers wants to get rid of it.
Get
rid of all the drug dealers and tax evaders.
Yeah, one could hope. I don't think that. My sense is that it only produces a marginal good on the margins. We'll find other substitutes, of course.
Right, Bitcoin. Okay, buddy.
All right. Well, thanks a lot. Good luck.
All right, thank you, Mark. Everyone, that's Mark Chandler at Mark Making Sense, Mark on the Market. He's one of the best, and I want to thank Mark for taking time out of his busy day for us. I just want to show the crude here real quick, guys. The crude has come out of the hole. Talked about putting at least a piece on here at 49. Hope that analysis, and Nick had a harmonic at 49.02. Crude looks like it's on its way. We could be hitting 51 maybe by the end of the week. So thank you everyone for your attention. Thank you, Blake, for your input today. Steve, thank you for your input. I hope I didn't hurt your feelings. I was only joking around with you.
I know, mate.
and Stelios and the community, thank you for your patience. I enjoyed the session today. Again, our mission every day is to build up and edify traders. It's our hope that we've added some value to what you're trying to accomplish in the markets today. Adios, amigos. And don't just count your pips like your 70, 80 pips in crude. Count your blessings. I'll see you tomorrow. Tomorrow I have Mark Newton with us. Many of you have probably seen Mark on CNBC, another excellent technician. So see everyone tomorrow for Mark Newton. Adios, face. Nice to see your face in face.